Hello and welcome to the second video on this mutual fund, where we are going to discuss the legal infrastructure within which the mutual fund has to operate. And by legal infrastructure, I mean, and I'm going to take you back to one of your courses that you've already done, financial accounting, where we looked at the legal form of doing business. I'm sure that you recall something like sole proprietorship, partnership firm, private company, public company, HUF, trust, societies, LLPs, right? So on and so forth. So I'm going to pick up one of that legal form and apply onto an application area called as the mutual fund. India is by default a very socialist country at the heart of the regulator. They feel whenever Aam Janta is involved, they need to be very protective about it. The rules that that are set in India are not belonging to crony capitalism. It's not a dog eat dog world that let the weakest person die and be eaten up by the stronger ones. No, we tend to protect the weaker, perhaps sometimes at the cost of the growth of the stronger one. That's the foundation for us. And that's the reason why the Indian regulators have taken the legal form, such as the trust, for the purpose of mutual funds. I'm going to share my screen right away to take you through the legal infrastructure for something called as operating mutual funds in India. And when I said trust, and when I said safer infrastructure, and when I said free from risk, I by no means wants to nullify the disclaimer, which says mutual funds are subject to market risk. Please read the offer document before investing. That's the that's called as the investment risk. That can your investment tomorrow become zero in worth? Absolutely, it's possible. And in one of my forthcoming videos, we're going to discuss the cycles of mutual fund, where we are going to talk about that the risk of a mutual fund comes from the securities where this pool gets invested. So if a mutual fund is giving out money in form of loans, debentures, bonds, etc., of a troubled company, of a troubled firm, or let's say a real estate player, or a company who is facing bankruptcy, and here is a mutual fund, a greedy money manager passing out the money from the pool, and the firm tomorrow goes to bankruptcy and everything becomes zero, that risk will come to initially the mutual fund. The value of the mutual fund will go down, but ultimately gets passed on to the investor, because mutual fund is nothing but a pass through mechanism. That's the keyword, pass through mechanism. I'm going to use this many times at different places just to communicate that mutual fund per se is nothing but a filter. Whatever is going to happen to mutual fund is in a way, in a pro rata sense, is going to happen to the investors. And that's the reason why the regulators are very careful about protection of Aam Janta. And that's the reason, that's one of the reasons that that SEBI, under which all mutual funds have to operate, have taken the roots of the trust, which means to say that every fund house that wants to operate mutual fund, what do you mean by operate mutual fund? They want to play money manager. So if tomorrow one of you wants to say, I want to manage others' money professionally, you can't do that. You can do that for friends and family, informally. But the moment you want to do that professionally, I've used this word professional money management in my first video as well. Whenever you want to do that, you have to first get yourself registered under SEBI. So that should you want to run tomorrow, taking Aam Janta's money, SEBI has all the wherewithal to catch you. Okay, so this professional money management model needs to be registered under the Indian Trust Act 1882. The name itself is, enticing some kind of a trust. And with that is the foundation for the mutual fund operations is laid. So it needs to be registered as a public trust. The word public denotes that it's not a personal beneficiary that is going to come in. So let me give you an example of a private trust. Mark Zuckerberg, and this was a news 5 6 years ago. that have transferred most of its investment into Facebook onto a family trust, which means that after he dies, and the wealth in form of the shares of Facebook is going to continue to grow, perpetual existence, then for whose benefit will that wealth be utilized? For the daughters of Zuckerberg family. So that doesn't mean that trust will tomorrow be able to benefit someone who is stuck of COVID or someone who is stuck of malnutrition. That kind of a very specific limited beneficiaries are making that trust a private trust. The Zuckerberg daughters. Here, the public trust means it's for, it's open to all. And by open to all, it means that today someone has a mutual fund investment, then they are protected by this. Tomorrow, if they sell their investments, then they are not. So it's a rolling cycle in a way. So Aam Janta gets protected here. And like I said, it's a pass-through mechanism where the regulator is absolutely clear that a fund house is nothing but just an agent who has to work for the investors. So here I'm reminded of the agency problem of CEO, the management versus the shareholders, which happens in a typical public company. And the classic example, which you would have heard about, is Vishal Sikka, the brilliant chap, versus Narayan Murthy. NRN as he's famously called. So you see, there is an agency problem here. Shareholders are the one who appoint the CEO so that the CEO works to accomplish what shareholders want. Yeah, the ways and means and the how of that modus operandi can be decided by the CEO. The same thing happens in context of the mutual fund. Here, we all, the investors, are called as the unit holders. In place of shareholders, we are called unit holders. And the CEO is nothing but a professional money manager. So, money manager doesn't have to take calls on what needs to be done. That must be governed by the unit holders. But how that needs to be done is money managers, baby. So here the regulators are very clear that money manager is nothing but a, a professional person hired. The skills are lent, acumen is lent, and some value is created. But who does this value belong to? The value belongs to the unit holder, the shareholder. Of course, can CEO take his salary? Of course, yes. Definitely you can. Can money manager take his compensation? Of course. Why would else he would work? He or she would work. So therefore, people having no profit motive basically here means that whatever is the value that is generated in the mutual fund doesn't belong to the CEO or the money manager or the person who is running the show. It belongs to the owners. So ultimately, mutual fund is nothing but a collective body of the investors where the bus is driven by an expert driver because none of the people who were sitting in the bus knew how to drive. So that's a broader figurative example that you can keep in mind. So in the legal sense, like you say, that investors are the beneficial owners of the investment. Here is a disclaimer also attached. So tomorrow, if investments become zero, is the CEO or the money manager going to become poor? No. He's going to get his salary, he or she's going to get his salary in any way. But it's the investor who bears the risk, and that's where the investment risk, mutual fund investment are subject to market risk. That famous disclaimer, that SEBI has mandated all mutual funds to print on the brochures, come into picture. In India, we have a three-tier structure. A sponsor, the person who puts in money, who founds the mutual fund, like a promoter of a company. The trustee, the the protectors of that fund, because ultimately Aam Janta is involved, and the asset management company, the main chap, CFA or an MBA finance, is generally employed in an asset management company, AMC as it is more famously known as, and you are here. I mean, I would love if you can sponsor a mutual fund if you are that wealthy, but by and large, we've seen that from an employment opportunity, it's the AMC that comes up, and that's what we are here to kind of discuss in greater detail. The structure of the mutual fund, as we said, is governed by SEBI, Mutual Funds Regulation 1996. So you can imagine that this instrument was taken seriously by the government way back in 1996. So it's now 25 years. Doesn't feel that old, isn't it? Because mutual fund has become a reality for the common household, more particularly after the demonetization, or perhaps after 2014. Okay, a little bit of that, because before that, the money, the stock market was perceived to be a little more risky and only for the riches of the world, and common household always used to avoid these things. But I think after demonetization is where I would call as an event which has made mutual fund a household name. So here are some of the boring stuff. So I'm going to pick up only the key points here. So sponsor, like I said, is like a promoter of the mutual fund. So if let's say tomorrow Franklin wants to start a mutual fund, wants to play the money manager's role, then Franklin as an entity becomes the sponsor. If let's say Aditya Birla wants to do that, so Aditya Birla Capital is going to become the sponsor. If Reliance wants to do it, then Reliance Capital now is India Nippon is going to be the sponsor. So basically, when I said fund houses, I meant how many sponsors exist. Okay, and this is what you and I are going to discuss in the live class. We're going to really go through many pages of the website of Amphi to find out some of these details. So sponsors are like very wealthy business houses. Kotak is a sponsor, Aditya Birla, like I mentioned, Axis Bank is a sponsor, SBI, ICICI. These are all financial services firm which, other than banking, is also into money management. But you can imagine that banking happens in a separate legal entity, ICICI Bank Limited. Whereas for ICICI, there is another legal entity, which is ICICI Prudential or ICICI, so on and so forth, which is into this model of a mutual fund. All right. Coming to the word trustee here, like I said, it's a board of trustee, group of people. Uh, it's a separate legal entity than sponsors, can to have that protection mechanism towards the arm janta. So if tomorrow something wrong happens to the mutual fund, the court of law is going to ask the trustee as to we had adhered to we have given this money to you under your guidance. What happened to the money of armed interest? It's trustee which is applicable, and trustee comes up again like from the basic legal structure of the mutual fund coming from the Indian Trust Act. The third and most important for you right now as part of this course is the asset management company. That's where the real action is. And I'm going to talk about the real action in just a while, where the day-to-day affairs of the mutual funds are managed. I'm going to come to custodian in a while. So that's a very, very rough cut of an example where the Reliance Capital Limited was the sponsor. And like I said, this has now become India Nippon after the ADAG group, Anil Dhirubhai Ambani, was under some stress and all that legal battle with the auditors and the cases of fraud had come up. So Reliance is the sponsor. They lend out the name to the mutual fund, and the role of a sponsor is just to make sure that they have adequate skin in the game and they just don't make a fool of this arm janta. They need to contribute 40% of the capital in the AMC. Of course, as an MBA, you don't have to really worry about these rules as much because these rules A continue to change, and B, no one would really hire you tomorrow, during the placements and ask you things like these. But just a broad sense that you must have as to when we say skin in the game, how do we, how do we illustrate that you have skin in the game? You also invest in the same company as Aam Janta is doing. Skin in the game. Then you have this trustee who appoints the AMC. That's where, like I said, you will be placed. And you generally do two broad functions. The general affairs of mutual fund needs to be managed. That's where the action is going to be. First, you will have to make sale of the product. This is a sales function. And this is a portfolio management function. So you can imagine which one of the two is more romantic side of mutual fund. Of course, the portfolio management. You need a CFA definitely, or a very meticulous MBA finance to be part of this fund management, because you can imagine the size of money that you would be dealing with. Any small mistake, those those retired people out there who have given you money, they can suffer, and therefore you need adequate skills. But for the marketing development function, you generally need a an MBA on the sales side, or marketing vertical MBA can also apply here. And sometimes you get a call from a particular fund house. Let's say we are calling from Aditya Birla, so and so. Would you like to take some, mutual funds or tax benefit ke liye, ELSS, and these are the words we are of course going to look at in detail. But we have heard about them on phone call. This call is coming from this department. So typically, the marketing and sales department comprise of broadly two verticals here. This is the marketing and sales. Two, which is the direct sales team. This is where, so let's take example of Kotak Asset Mutual Fund. So Kotak would have their own employees. These are employees of Kotak who will be responsible. They are target-based jobs. After all, any job in marketing and sales is target-based. So they are the employees of Kotak who would be dealing only with HNIs and some of the institutional investors, such as um, uh, any fund, or any PE, or any the different institutions that way. On the other hand, they also have the distribution channel in form of a line of direct selling agent or financial brokers. I am not using the word financial advisors because, as per the latest guidelines of SEBI, one can either advise or sell a mutual fund, because again, the ability to influence and make an arm janta buy a wrong instrument is always there in advisor. So SEBI has categorically, and this is how the rules evolved. Way back then in 1996, none of that thing existed. Very crude and broad rules. Now the rules are getting refined, and now SEBI has said that either you can be a broker, you are selling a product, or you can be an advisor, where you must be paid for the advice that you're giving, not for the product that you're selling. So the function has been divided between the two. So people, let's say your parents are investing into mutual fund, they would have definitely have one person to whom they make a call and say that you want to invest 50,000 into mutual funds. So which funds are good? So these are the typical brokers that they are making a call to. And here you can create layers. So Kotak would be dealing with, let's say, 2,000 such brokers overall in the country. And those brokers will have sub brokers will have sub brokers to cater to a lower ticket size. How do you invest? How does the transaction happen? Earlier used to be a paper form. Today also tons and tons of paper gets wasted because getting a mutual fund account opened, you need to fill up a lot of form. There is a KYC done. Remember protectionism at play. That's why know your customer and so much detail. You need PAN, you need Aadhaar, you need residence proof, photographs, bank account details, the cancelled check copies, and what yes and what not. So all that is a paper-based thing. But there is a possibility today that if, let's say, such as someone has an account with ICICI Direct for share trading platform, nothing to do with mutual fund 20 years ago. ICICI Direct is a share broker. Now the share broker has also taken permission from SEBI that can I sell mutual funds also? Now ICICI Direct, the same platform, can be used to buy the mutual funds as well. Okay, so you see, ICICI Direct is a broker between you, the investor, and the mutual fund, whose funds are you buying. But am I meaning to say that ICICI Direct is going to sell the mutual funds only of ICICI Prudential? No. From ICICI Direct, you can buy any mutual fund. So if, let's say, my investors are here, Bholi Bhali Janta is here, Then through this broker, I can buy Access, I can buy SBI, I can buy Kotak, whatever else. So ICICI Direct is a platform. It's a common broker from which an online purchase could be done. See, online, that's how digitization, etc., is happening. So I'm going to come back to the original thing that I had left, which is the custodian. That's more of a transactional guy. Strategically, you have three bodies: the sponsor, who is the initiator of the game; trustee, who is supposed to be responsible for money and answerable for anything wrong that happens; asset management company is the doer of the game, the marketing. Ultimately, they need funds to manage. And so that's the first part of AMC. And second is to actually do the portfolio management. This portfolio management is, should I invest into equity, debt, real estate, gold, for how long, in what ratios, and all that portfolio management skills you're going to apply here. So in your courses, I think one of the courses that you would be taking is investment management. That's where investment management fundamentals will be put to use. Okay. But there is a fourth entity, people, into this game, called as a custodian. Like I said, it's a transactional guy who is basically to actually keep the securities that mutual fund is buying in safe custody. Because ultimately, think of it. You gave money to the money manager, and money manager bought some shares, let's say, of Hindustan Unilever. Now, in whose name are those shares legally? In the name of course, the buyer. The buyer is the AMC. But the custodian is responsible to keep those shares with him. The shares are not at AMC's wallet. So think of custodian as a digital wallet. Think of it as a demat account. Think of it as a locker where whatever AMC is buying is kept, just to give you more confidence as investor that the person who is buying is not keeping stuff with him, so that tomorrow he might make a buy and sell without telling you. See, if every time things go in a common locker, you as investor are more assured that the money manager, the crony money manager, the AMC, they're the culprits of the world, and there are a lot of bad governance practices there as well. They are at check. Custodian plays that safekeeping role. Who's responsible for it? Trustee. By design, it's the trustee. But who on a transactional level is ensuring the safekeep? That's the custodian. All right. There's an entity called as registrar, etc. And then depository, etc. But I think you don't really need to bother yourself with that. So people, with that, I'm good to close this particular second video on this mutual fund. I hope that now you're making some greater sense of this concept. I look forward to meet you in the live classes with greater application of these concepts. Okay, see you then.